Why do you oppose the reappointment of Janet Yellen?
Well, she's a very nice lady, but it's about policy, really. And I just don't think Janet Yellen would be a great successor to Janet Yellen.
What did she do wrong?
Well, I think she's really hurt our growth rate, and here's how. Basel III standards, they're international standards that the United States has agreed to, not through the legislative process, but because of the Fed. It's a central banker deal, by and large. And these standards are being interpreted and applied in a way that hurts working capital. So fundamentally, they're putting this working capital as if, say, a line of credit for a household, somebody's got a credit card. You don't use the entire balance available normally, but they wanted banks to treat, the regulators to treat this as if companies were using their entire line. And when that happens, they've got a lot of liabilities that aren't offset by assets. So fundamentally, companies are pushed to grow at a slower rate because they don't have the same access to working capital. This is a big untold story, and it's a big part of why our growth rate's been hamstrung at 1.5% until this year.
Steve? Representative Davidson, are you saying the Fed is acting illegally in signing on to Basel III Accords?
I'm not saying it's entirely illegal.
Entirely means it's somewhat illegal?
Well, here's the problem.
Well, is the Fed acting within the mandate of Congress or not?
I think they're stretching the limits of what their charter is, because they're essentially binding us to a treaty that isn't a treaty. So the net effect of what their application has been at the limits of what may be permissible. But here's the reality. It's not been effective, even whether it's legal or not. What they've been doing has actually been essentially crossing the line into fiscal policy. And then the monetary policy has gotten a lot of attention because Taylor's on the list, and the Taylor rule's gotten a lot of characterization, in my opinion, mischaracterization. So whether or not the president, it's the president's choice, and of course the Senate gets to weigh in. The House doesn't really have a say, but of course we have an opinion.
But do you think, Congressman, that, to be fair to Chair Yellen, Ben Bernanke may have done it, Alan Greenspan may have done it? I mean, we don't know if other Fed heads would have taken the same action, do we? So is it fair to put this all on Chair Yellen?
No, it's not fair to put it all on Chair Yellen, and frankly, it's not a single person's decision inside the Fed. But I think that's why we're pushing for a different direction there. And so,
but shouldn't you be pushing, Congressman, for additional congressional limits on the actions the Fed can take? I mean, you're either arguing the Fed acted illegally, or you're conceding that it acted within its congressional mandate. And if it is acted within its congressional mandate and you're not happy with those actions, then the right solution to that, if I'm not mistaken, is additional congressional limitations.
Well,
anybody could be doing that, as Brian is suggesting.
Well, you're pushing a false narrative that there's only two choices here. We will be pushing for stronger legislation, but there's a perfect opportunity to change leadership. And so you don't have to question whether a different leader will go in a different way. You can discover that through the interview process. And my hope is that we can choose to go a different way. Not that Janet Yellen's a bad person. She's a very charming lady. Really enjoyed the interactions I've had with her. But I do think that we need to take a different course on the regulatory guidance the Fed has been driving.
Representative, I think some people would agree with you, at least from this point on, that perhaps some of the capital requirements that are placed on banks should be loosened up. I'm sure the banks would argue in that favor. But when it comes to the Fed's massive balance sheet, we are in the midst right now, and I shouldn't say in the midst, we are at the beginning of the unwind of that. Would you have recommended that we sort of ripped off the Band-Aid and started to ease right away? I mean, what was the alternative course here, aside from the course that we have been on, which, by the way, allowed for the stock market to reach record highs?
Well, it has driven, everything about this has driven the market to be high. And some people feel that, this is an asset bubble in a sense because it's driven a lot of demand for equity. It's destroyed debt as a market, not just by the low rates, but by the application of the regulatory framework in terms of crippling some of those working capital requirements. So everything about this juices the equity market. And so some people have stronger beefs on that. But I think the alternative, once they did make the asset purchases that they've done, particularly in credit risk transfers, I think they're doing a fine job of that. They're not surprising the markets. They're unwinding it. They're doing that in a way that's telegraphed. And so whether they should be in the position they're in or not.
Your beef with Chair Yellen really focuses squarely on Basel III. Is that
Basel III,
correct?
not on anything else?
I mean, because the letter here that was signed makes a big point about pointing out the trillions of dollars amassed on the balance sheet. But really, it's Basel III?
Well, I wouldn't say that it was a great idea to do some of the quantitative easing that's been done and some of the asset purchases that have been done to the scale they've been done. But I do think it's past time to begin unwinding them. Now that they have committed to do the unwinding, which was the question you asked, the way I took it, I think they're smart about how they're doing it. They shouldn't be surprising markets and dumping these. That would really distort, long-term rates in particular.
Do you think that the economy, let's separate the economy from the casino of the stock market. Do you think the economy would have been better off if the asset purchases had been more modest and interest rates had been higher rather than staying as low as they have over the past 8 years?
Personally, I do, particularly on the regulatory framework. If you had allowed a debt market to form and you had been less restrictive on the back end in the regulatory framework, I think working capital would have been more accessible, and small and medium businesses, which do drive our growth rate, would have had a better path towards growth. And so personally, I experienced this before I was a member of Congress. I mean, I literally had a banker say, well, you guys have been growing 20+%. Why not grow at 5% and play more golf? And the answer, because I don't want to play golf, I want to grow companies. And you propagate that message across not just my business, but an entire economy. That's how you wind up with a 1.5% growth rate.
All right, interesting conversation. Representative Davidson, thank you very much for being with us. Hope to